right down here, it's this red bar that has begun to push down and is red. And the very last time that we got a red bar like this was back in March of 2022. It obviously was preceding an incoming decline in stocks. Well, we printed another one so far here in the month of April. This is our first problem that can't be ignored. It's an early warning sign of a potential macro downshift coming. So this is the red alarm ringing. Guys, hey, pay attention to this market. The green days have come to an end, and we're beginning our first month of potential impending red days. We cannot ignore that first red MACD histogram. Now, number 2, MACD lines are curling for a potential bear cross. That's right up here. Now, people that have followed me, I've taught them some things about the MACD. They've fallen in love with it, and they've come to respect it and to understand that when the MACD prints a buy or sell signal, don't ignore it because you're just ignoring your pocketbook at that point. We have a cross down of the MACD line beneath, which is the blue line, beneath the orange line, which is the signal line. This happened once before. When did it happen? Well, same exact period back in March of 2022. And obviously, we saw continued downturn. This doesn't happen all the time. You can see that we had red candles previous to that March 2022 downturn, but the trend didn't begin until it crossed below and we printed our first red histogram bar, just like we've done right now. Now, I'm going to get into some of the conflicting signals on the chart here today, but let's continue to go through what problems exist. We have RSI bearish divergence, absolutely confirmed. What is that? Well, that's when the price, so here we have a momentum high right here and a price high, okay? But then later on, and this got printed here in January of 2018, okay? But then we had another huge uptick in August of 2021, and this printed a higher high in price, but a lower high in momentum. Now, because that happened, we ended up getting that downturn in 2022, right? Well, we did something very similar. The markets ramped back up. We made another market high, as we all know, back here in February of 2025. And unfortunately, we printed a lower momentum high on the RSI. So you can see that we've had bearish divergence that is basically coming to a peak or a climax repeatedly. Because this event occurred, that we had this beautiful all-time high up here, but a lower momentum high, it immediately led to the sell-off that we've just gone through. And the fact is, that has not been fully reconciled. The bearish divergence, the first red histogram bar, the crossover of the MACD, and the lower price all signal to a longer-term downtrend that has just begun, not coming to an end. Now, though that is the bearish story, and I've got a little bit more to share with you. I'm not going to make it all bearish because if it was just that easy that we could identify the trend, short the market, and we'd all get rich, well, then everybody would be doing it. We have something here that's happened that is pretty important. It's this candle. This is a hammer candle or a bullish pin bar, and it bounced right on previous resistance. Resistance turned support. This is the place where the bulls stepped in and began to buy up the bottom. And they bought it all the way back up to around this 550.51. The last one is these bars down here. The biggest bars on this chart are red bars on the last 2 monthly candles. And the big picture view of that is that this is suggesting that it's not retail that's selling. These are institutional sellers who are profit-taking after a market that's been largely running up, not for a month, not for 6 months, but has largely been running up ever since 2020. Yes, we had a dip in 2022, but there was a ton of buying, big tech companies going up 100, 200%, large caps. That's not usual. This is institutional profit-taking, which is often the case right before a large volatility cycle or even a shift in the market.